Hello everyone, this is Atik and I'm back with another video on financial accounting, and this time I'm going to introduce you to three new accounting terms, that is revenue, expense and dividends. If you haven't watched my previous video on basic accounting equation, then please go ahead and watch it to have a better understanding of assets, liabilities and equity. Because this time we are going to take the basic accounting equation and expand it to squeeze in revenue, expense and dividend. So let's get started. As discussed in the previous video, the basic accounting equation says that the total assets of a company is equal to the total liabilities and equity of that company. Now, if we expand this equation and split equity in two parts, then we are going to get assets is equal to liabilities plus paid in capital plus retained earnings. Now, paid in capital is the amount of capital paid in by the investors when the company issued common or preferred stock. This is one of the key components of the equity of the business. Retained earnings is the amount of profit that is retained in the business. If we split retained earnings, we are going to get revenue minus expense minus dividends. Finally, we will have the expanded accounting equation as assets is equal to liabilities plus paid in capital plus revenue minus expense minus dividends. Now let's understand revenue. Revenue is what a company earns by either selling their product or by providing services to their customers. For example, Tesla earns revenue by selling their cars, so sales revenue is their primary revenue. Your school or university earns revenue by providing educational services, so service revenue is their primary revenue. So basically, revenue is what a company earns by doing what it does. Some other examples of revenue include rent revenue, interest revenue, commission revenue, etc. Next we have expense. An expense is the cost of operation that a company incurs to generate revenue. For example, if a person is in the business of manufacturing leather bags, then the cost of procuring leather is an expense for the company. And since it is directly related to manufacturing of leather bags, it becomes the cost of goods sold for the business. So cost of goods sold records the direct costs related to manufacturing of products. Other examples include salary expense. The amount of salary we pay out to our employees in exchange for their services is our salary expense. The payment for electricity is our electricity expense. If a business is paying rent for its office space, then that's the rent expense for the business. So these are some examples of expense a business may incur. Now here is an important thing to note. If we want our business to earn income, we shall make sure that our revenue is greater than our expenses. So the net income formula is revenue minus expense. But if our expense gets higher than our revenue, then we are going to incur a net loss. Now we will discuss dividends. Dividend is what a company pays to its shareholders out of its profits. So basically, dividend is the part of the profit a company shares with its shareholders. If a company pays cash to its shareholders, then it is cash dividend, or if the company issues stock, then it is called stock dividend. Let's work on some examples. Let's say in scenario 1 we have assets worth $100,000, liabilities $25,000, paid in capital $30,000, revenue $85,000, dividends $5,000. Then what is the total expense of the company? We are simply going to take the expanded accounting equation and rearrange it. Now the equation would be expense is equal to liabilities plus paid in capital plus revenue minus assets minus dividends. In the next step, we are going to add liabilities worth $25,000, paid in capital $30,000, revenue $85,000, and then deduct assets and dividends worth $100,000 and $5,000 respectively. In the next step, we are getting $140,000 minus $105,000. So the expense of the company is $35,000. Let's say in scenario 2 we have assets worth $250,000, liabilities $45,000, paid in capital $80,000, expense $90,000, dividends $15,000. Then what is the total revenue of the company? We are going to take the expanded accounting equation and rearrange it. So our equation would stand as follows. Revenue is equal to assets plus expense plus dividends minus liabilities minus paid-in capital. In the next step, we are going to add assets worth $250,000 plus expenses worth $90,000, dividends $15,000, and from that we are going to deduct liabilities and paid-in capital worth $45,000 and $80,000 respectively. In the next step, we are going to deduct $125,000 from $355,000. The total revenue of the company comes at $230,000. So this is how we are going to solve problems based on expanded accounting equation by simply rearranging the equation in our favor. I hope you would find this video helpful. If so, do like and subscribe for more accounting videos every week. Thank you so much for watching. See you in the next video. Till then, goodbye and take care.